Mark, let's start with what we heard from President Trump then yesterday in the various formats that we heard it. Some people taking a sort of risk-negative message from what he said about Canada and Mexico. Others, and I think you're in this camp, saying, well, actually, don't worry too much. It wasn't China and it's not today. So we have a little respite on that sort of risk-off tariff story. Your overall assessment?
I think overall it was very much a risk-positive message from Donald Trump. I understand that things can change. I understand that he's considered unpredictable, but we just have to take the facts at face value from where we were a few days ago. You take this day a week ago as an arbitrary starting point. At that time, it was expected that day one or day two tariffs would be announced on China to some varying degree. Now we have a study on China trade, which implies nothing is coming imminently. So already that is a massive win for global markets, given that China is such a key global economy and the key global trade partner around the world. So that's a big positive. The other one is that we were expecting some other tariff measures. And now already, for example, the threatened ones on Canada and Mexico that are the ones people are most worried about today, well, they've been pushed back to February 1st from potentially being January 20th or January 21st. So they're already being 11 days later. It seems like these tariff threats for the moment, the message from yesterday is these were more about negotiations. And also remember, those 25% suggested tariffs by February 1st, Trump could have done them yesterday if he really wanted to. That was in response to some questions. It was kind of off the cuff and is in line with his campaign speech. Clearly, there was no desire to do it yesterday. Also, he made some other comments about talking about people could essentially, European countries could avoid tariffs if they kind of buy oil from the US, etc., which again, all these things imply that those who believe the tariff threats were more of a negotiating ploy are currently in the correct camp. That may change in the future, but for now, the message is very much risk on and dollar negative.
Well, Mark, talk to us about what is actually priced in then. If we're just talking about negotiations, so much of this was priced in on the campaign trail when it comes to, say, Mexico or Canada, for example. We'll put China on the back burner. What's priced in to EM currencies right now?
It's really hard to work it out exactly. I think that the fact is these currencies are significantly weaker against the dollar since the election. And I think you see in the short-term reactions this morning, when we are currently trading the narrative, no new tariffs from day one, before the Canada-Mexico comments are made, these currencies, 11 of the 16 major currencies on the Bloomberg, rallied by more than 1% against the dollar. We are seeing really, really powerful moves. Then when we suddenly got the headline threats of 25% against Canada and Mexico by February 1st, sure, they paired those gains, but not so much, apart from obviously CAD and Mexican peso itself. So I think overall there's an asymmetric risk here on the dollar, and I think it's more likely downside without a big shift in narrative again.